Good morning. My name is Olga Miller, and I'm your MC today for COGEX Fintech and Financial Services stage. Super excited to be here, dialing in from wonderful warm Zurich, and I hope you are as excited as I am to explore today leading thinkers, innovators, professionals, as they will be discussing what is in the future for fintech and financial services. The COGEX Festival is an amazing undertaking, and it wouldn't be possible without the support of some wonderful partners. So please allow me to thank Accenture, BT, Quantum Black, Visa, as well as Shell and the Big Innovation Center for supporting this festival so that we all can be here. Now, before we take it away with the first session, for all of you who are watching, to make the most out of the day, please feel free to ask any questions through the chat function on the system. Also, please feel free to share your insights, comments, observations through social media using the hashtag COGEX2020. And with that, I think you all have come here to hear the amazing speakers and not just watch me as your MC, because I'm going to be here all day long. So let me take it away with the first session titled Green Rockets or Green Bottlenecks. What does the next cycle hold? The session will be moderated by Jana Randow, Senior European Economist reporter at Bloomberg. And Jana, take it away.
Hey, good morning. Welcome everyone to this session on what the global fight against climate change means for the economy. As Olga said, my name is Jana Randow. I'm the Senior European Economy reporter at Bloomberg, and I'm thrilled to be here today, even if it's only virtually. For the next 30 minutes or so, I'll be quizzing Steen Jakobsen, the chief economist at Saxo Bank, about whether he sees the future holding green rockets or green bottlenecks. And then it's your turn to ask questions. So as Olga said, please submit them in the Q&A section on your screen. And with that, let's get this started. You've been in the business for more than 30 years, and you've seen the economy go through many, many shocks and transformations. But is there anything in recent history that compares even slightly to the challenges we're currently facing in greening the economy?
I think if you're a history buff, you would like to make an analogy all the way back to the 1970s, not only because we had a similar sort of energy boost to prices then, but also because there was big government, it was high inflation, it was no thank you to nuclear power, it was terrorism, it was a lot about unanchoring from the gold standard. It was the introduction of the trading markets as we see today. To some extent, I'll say, as a history buff myself, I think we are 50 years into a cycle, so we are entering a new cycle. So I think today's topic couldn't be more relevant.
Many interesting points you mentioned there that will come back in the next half hour. Right now, I want to talk a little bit about the economics behind it. So there's been a lot of talk about the pandemic actually being the catalyst in getting serious about fighting climate change. Europe wants to be carbon neutral by 2050. The US has similar ambitions. Even China is making is on track of making bold changes. Yet I'm still sure that many activists would argue that whatever we're doing, it's not enough. I want to ask you, economically speaking, can we actually afford to all decarbonize at the same time?
We can, as human beings and mankind, we can do what we want. I think we've shown that again and again. But from a bottom-up economic perspective, it is very expensive because, of course, as you say, the COVID-19 created really three new impulses. One being that we need to fight the social injustice, inequality in society. The second one is that the path to that, to some extent, is to go to a green transformation, net zero neutral, and then infrastructure, which sits, of course, with both of those two items. So I will say, as an economist, we're trying to solve for three generational challenges at the same time, where I will say, as an economist, solving one of them would have been a formidable task on its own, but instead we're going to do three. I think the consequence is already there to be seen. And the answer to the question asked at the top of this session is that we will have bottlenecks, because if you decarbonize, you're really metallizing the economy at a time where we are underinvested into the mining capacity, where the grading of the underlying mining capacity is falling year by year, and where the true cost of what we are about to start has not been computed correctly. Just let me say that I've been trying to figure out whether I should buy a new electrical vehicle instead of replacing my gasoline. And I've read about 20 different surveys, and they have 20 different results on the actual miles before I become a green citizen. Of course, one part of the lobby will say it's a 10,000 kilometers. Another one says it's 150. So just the fact that it's very difficult to put facts on the table makes this navigation very difficult.
You mentioned bottlenecks. We've seen in the evening news, that there are raw material shortages, transportation lock jams. I don't remember a time when it was as difficult for manufacturing in particular. And you also mentioned mining problems. So do we have the capacity in the world to transform the economy, or what do we need to do to make it happen?
So the short answer to that is technology. We need some kind of new technology evolution. But if we stay in what we have today, and in terms of the technology in place, it's very clear that the physical world is too small for the green transformation and the digitization of the economy. To some extent, we have been victim of our own success in the capital markets. Money has been flowing to all kinds of projects and companies that are having a pipe dream about sometime to, in the next 50 years, to create something tangible, where we have had, at the same time, we have governments, 70% of governments globally now in GDP terms are now committed to net zero. So for an economist like me, it's very much a good aspiration, it's a needed aspiration, but it's also something where we are ignoring the facts of how energy is contributing. So if you think of energy, we started by burning woods, then we started to burn coal, then we started to burn natural gas and oil, and then we went to nuclear power. Every single step there is a massive increase in what is called the energy density, the ability to create enough electricity. Whereas now the solution, renewable energy, of course, being wind and being solar, and despite the fact that their capacity has also increased, it's still sitting somewhere between burning woods and burning coal in terms of density. So this would be the first time that we solve what I perceive to be a technology issue with a solution that moves back in the evolution timetable.
You mentioned technology, and in many ways, the idea of green growth rests on the assumption that technology can actually save us. What is needed for that to happen? Wind, you're reliant on wind happening to make energy out of it. Same with solar. The sun isn't shining everywhere. So what do we need to see on the technology front?
First of all, I think we need to change the business model. So the way that we conduct green transformation right now is by a political narrative to create a net zero outcome. But that outcome is right now depending 70% of existing technology and 30% new ones. I think we need to change that scale around and make it 70% new technologies. And to do that, we need to focus on more cross-governmental support in a world which is moving away from exactly that. In geopolitical terms, every single country right now is prioritizing its own resources, its way is going to be self-reliant, and in the way they conduct the narrative. So we, to some extent, we're already starting on the wrong foot in the sense that collaboration is what creates new innovations. If you look, Jana, at all the big innovations that we've seen in history, most of them, the big one, has been because of global collaboration. We can have the genome mapping, we can have the internet, we can have the recent vaccine fight that we had. all of that is based on everybody at their best. But instead, when we look at green transformation, it's very much a national agenda. In the case of the US, it's keeping American jobs at home. In the case of China, it is to compete with the rest of the world. In terms of Europe, it is to move to a greener future that is defined. So I'm critically concerned about the fact that we think that by doing what we've done all the time, but increasing the incentive through carbon taxes and everything else, that we get a solution in itself. I don't think that's a solution, because again, the energy density, the base load of energy that we need on a daily basis. Just think about the electric vehicle perspective. We need 30 times more loading stations in Europe to reach the 2030 target. Just building that out is going to be an incredible endeavor on itself, an investment in terms of euros. But on top of that, we also need to see that capacity in the mining sector needs to go up by 10 to 15 times. And that's simply physically not possible. So the risk is that if we don't coordinate the policy, if we don't get government supports for minimum prices in renewable energy, if we don't put taxes on carbon, then ultimately we can end up in an arbitrage where really it's just the government who continue to push money into the economy. We don't get the acceptance and the collaboration from the people, which is sincerely needed here. But so I'm really calling on the fact that this technology drive needs to be global in scope, and it needs to be driven by incentive structures all around in order to get to that next level energy, because we need fusion energy or hydrogen or something else to come to fruition over the next 0 to 5 years. I am very optimistic about that, but the present sort of renewable energy replacement and talk is really just metallizing the economies. And as an economist, I see, and I am seriously concerned about the inflationary impact, which again, of course, makes the marginal cost of capital, everything being equal, higher, and that will hit again the investment into the green sector.
Many interesting things that I want to come back to. But first of all, I mean, we've just been through a pandemic. We're still fighting to get out of it and get the economy on a solid footing again. And that international cooperation that you're talking about, we've seen that happening in developing vaccines. It wouldn't have happened without it. Do we, in order to get this cooperation on climate change, do we need to give up on the concept of economic growth, since that is actually what is oftentimes behind protectionist measures? This American First campaign, for example, it was about keeping jobs in the US, making sure the US economy is growing. So would a successful effort, a global effort, to fight climate change need to see a shift in priorities away from growth?
I certainly think so. And just to give an example of that, if you have two competing factories doing the same product, one is very pollutive and doesn't care about the environment, and the other being totally net zero and doing everything by the book, in GDP terms, they have the same contribution to the economy. You don't calculate the full cycle impact of that production, and that needs to happen. Some people argue that has to come through taxation and leveling the playing field. I think, being in this business for 30 years, the way we do this is by increasing productivity, increasing the risk incentive in the marketplace, and creating a capital structure that is supportive of investment into it. We need to get to the next level. And I think, as you rightly say, Jana, I think the pandemic fight that we saw is one of the most amazing ever in terms of the time to delivery, the aspect of international cooperation. But excellent, just turn to the G7 meeting that was just passed this weekend. They couldn't agree on getting vaccines out to helping nations. They couldn't agree on the agenda on green. And everything being said, we still have $100 billion of commitment from the Paris Accord, which is not being financed yet. So when it comes down to actually paying money, unless it's some superficial money like the EU budgets or budgets that you are not responsible for, the political narrative is very difficult. But maybe your home country is going to be one of the game changers, at least for Europe, because I think the rise of the Green Party in Germany is very interesting in the context of green, but also in the context of cooperation in Europe.
Well, we can talk about Germany after September, after the elections. But let's talk about money. And I want to talk about government and public money first, and then about the private contributions after that. So in the wake of the pandemic, a lot of the recovery plans we're seeing are throwing a lot of dollars, a lot of euros, a lot of you name it, at infrastructure investment. Most of it is financed by debt. And then you have, that's in the developed world. Then you have emerging markets, which have a lot less room to maneuver. But at the same time, they are the ones who really need to make changes. How do we get around that problem of misallocation of funds? And do you see potential risks of debt crises on the horizon?
Yes, you're right. So if we really make a harsh conclusion, it would be that the only people who can afford a green transformation is the OECD countries, and even inside the OECD countries, it's only the Western countries that can afford it, together with China. Because the marginal cost of capital, as you rightly indicate, is much, much higher for Indonesia or in India or anyone else to go to the market and raise the same amount of capital. That comes from history, comes from legacy in terms of the pricing of the bonds in those markets and the inflation risk. So it is absolutely, again, a global coordination role to do that. But having said that, I think it's far more important to get the micro level to work. So we economists, and why we get everything wrong, and we partly talked about this before going on stage, that the economist has never predicted anything. And I think the problem is that there's so many variables in macro, but in micro, we know incentive works. We know that it is the SMEs that's going to make a difference. And I think the narrative and the way we scope the challenge here is not only going to net zero, but a lot of SME companies have already moved towards reducing the impact and negative they have on the environment. Some companies, some production factors cannot be net zero. Then the rest of society needs to compensate for that. So again, I'm trying to illustrate, Jana, not that I don't want to answer your question directly, but there are so many moving parameters in this equation that is extremely difficult. I think it starts by you and me, the SME companies, which in any country is 70 to 80% of the GDP, 70 to 80% of the employment. If everyone using less material become more prevalent in the way they discussed and set out the future sort of products and what the way they do, 3D printing will probably be very big. 3D printing can reduce the amount of material we need. The liquid used in a lot of manufacturing processes is the biggest toxic left over from that production. That is also being reduced by precision. So technology-wise, I'm pretty optimistic. What I'm concerned about, as indicated by your question as well, is that the cost of this is that we are following, to some extent, a pipe dream of doing renewable energy as the replacement for what is existing. I think a much bigger focus on technology and global coordination is what needed. Unfortunately, global coordination is a little bit left behind, but that doesn't mean that the UK, Denmark, Germany, Europe, the world cannot only benefit themselves, but also the wider sort of regions and need that we have in the East. Because right now, if you look at CO2 emission, Europe is back to the 1960s levels, whereas China, the US, and certainly emerging market is still going much higher in its own CO2. So to some extent, we have halted the progress in Europe, but the rest of the world is far behind. And we are only ahead, not because we are nicer or better, but only because we can afford to have that conversation. These countries in Europe can afford to invest, whether it's productive or not. They are sinking money into this, and they're doing it ahead of all the emerging market. We need to share, again, that knowledge, the way of doing it or not doing it. And one way not to doing it, politically certainly, is the way that Europe wants to do it.
It seems that if you're a company and if you're trying to raise money for green projects, you have absolutely no problem finding that money in financial markets. There's an ever-increasing demand for green assets. And you talked a little bit about this before. I'm wondering how much of the money that's currently thrown at green projects will actually make a difference down the line?
Ooh, That's a big one, Jana. Can I have an easier question? uh, so basically, innovation comes from its ability to be productive. And without being negative, I'll say that 90% of the flow that goes into the green sector right now is based on dreams and aspiration and hope, and not on that technology prevailing. But on the other hand, we need to fail and fail and fail again in order to get that innovation. I think people misunderstand the concept of innovation wholeheartedly, in the sense that people think it is something that you can plan in a laboratory, and you can sort of set out an agenda for how you become both productive and innovative. The fact is that most of the innovation that happens in the world is a random process, or done by some guys who sit in or girl who sits in an isolated laboratory somewhere and is just experimenting. So we need to have broader basic research. We need to allow for the fact that that happens, and it's going to cost a lot of capital. And I think, we have provisioned in the budgets for the military. We have provision for education. We have provision for, why don't we have provision for investment into research, basic research? In the case of Denmark, we have a 1% GDP per year for 4 and 8. We should have a 5% GDP target in research. And here I talk just broad, universal research, not being guided by any governments, not guided by any think tank, but just have access to research funds, because I think we can do anything in technology, but I think a lot of the money, and let's step one step back. Last year was the best year. The best performance sector last year was the green transformation sector. This year is one of the worst. Why? Because the cost of capital and the ability to deliver a cash flow inside the next 10 years is very small. So maybe that is the more direct answer to your question, that the market right now is buying lottery tickets in the green transformation sector. I wish we were not doing that, instead was using more basic research and funding globally, and getting researchers to exchange not only verbally and written, but also physically, as we used to do in the old days.
Are you concerned about a bubble?
There is a massive bubble in green transformation, and to some extent you can argue it's also needed, because money needs to flow to this. But in the first 3 months of this year alone, I think about $125 billion came into the green sector in the US alone. But 125 billion sits against a estimated number of needed investment in infrastructure and green transformation of $4 trillion a year. So the numbers are still small, because they're not allocated in a way that creates productivity, but create a shareholder value. I'm not against shareholder values, of course, being a banker, but the problem here from the solution for society may not mimic that of an investor, and maybe that is the real conversation, Jana. That to solve for decarbonization and moving to net zero, maybe we need to address it in a way where it's not about governments only doing this. It's about getting both sides, the government and the companies, to do better, either through, as we said, SME reduction in the footprint and investment and 3D printing and reduce material and everything else. I think, but it is a formidable task in any aspect.
Now, part of your job is delivering asset allocation strategies, and I'm just wondering, you got any tips for us, for me and the audience?
Yeah, unfortunately, the byproduct of this green transformation and the three generational challenges for us is that we have started what is now the 7th super cycle in commodities. The fact that we are, if you look at the three generational challenges, which is inequality, green transformation, and infrastructure, we have spent 80% on inequality, 10% on green transformation, and 10% on infrastructure. And we already have bottlenecks in the pipeline. So something like copper, cobalt, lithium, all these things, as I think the Economist wrote over the weekend, a basket of 5 metal components going into to a battery production is up 139% over the last year. I don't think it stops there, because China is committed, as you indicated, by 2060 to be net zero. They need to build a lot of windmills, a lot of solar panels, and what does that entails huge amount of metals again. So maybe the upcoming crisis of too high metal prices will force the technology in a direction where we replace it with more thinking about how we can solve without metallizing the economy at the same time. But for now, as an investor, you need to play the game of being long the commodity cycle. You probably also need to be long the inflation, because these bottlenecks is creating day by day, not the transitory message that the Fed is giving us, but basically real inflation. And just as a reference to that, of course, we had a 5% print CPI in the US, but if the basket of inflation in the US has not been changed, that would have been in the 1980s an equivalent print of 13% increase in prices. So there's a lot of hidden cost already in the system that I am nervous about will set up a cleaning up of the green industry. And if that cleanup becomes one from, as you say, one of bubble stocks to one of the survivorship being the companies with the highest propensity, highest probability of being successful, then I think it's a good idea. And just to end it up, we've seen a number of companies turn, Exxon being forced into it, Volkswagen, the biggest manufacturer of cars in the world, turning to electric vehicle. Geely, one of the biggest Chinese, was a leader in this. So overall, I think we are in a process where companies are doing their bits. Not negative, but very concerned about the cost to the fact that the physical world is too small for us.
Inflation and central banks is indeed one of the issues I wanted to touch on, and you've explained a lot of it already. We're seeing the impact of climate change and fighting climate change on inflation prints, and central banks around the world are looking for how they should factor in climate change into their monetary policies, whether they should, whether they shouldn't, how it's best done. So far, the answer has always been we're looking through external shocks, treating it like a transitory thing. Is that still the right approach, or do we need a change of tunes and a different way at how we look at the cost of climate change?
Absolutely. So if Fed is wrong, and I think it's very likely they are, the cost is massive to the green transformation process, because right now we have the biggest liquidity provision ever in the history of mankind in terms of the SX reserves that sits in the reverse repo north of 500 billion. We have the general account, a accounting mechanism inside the Federal Reserve being used by treasuries, paying an increasing liquidity in the system by 800 billion. You had all the payouts to the individual in terms of help and support. So you're floating the market. Effectively, what we have seen so far this year is the equivalent in monetary terms of a rate cut of between 100 and 150 basis points. That's the reason why interest rate is not going up. But if we assume that the Fed is wrong, then there is a catch-up effect coming in August, September, November, when the inflation data no longer is transitory, where the bottlenecks remains in the mining sector, in the shipping industry, and all the things that we've seen so far. And that will increase the cost of capital so much so that it is a hindrance. It actually will stop and be a bump in the road for green transformation, because we have to remember that green transformation, because it's not a cash flow positive generator, has a huge dependency of the cost of capital. In other words, the higher the cost of capital goes, the more inefficient, the more costly it is to have all of these pipe dreams. So what the Fed should be doing is to have a more sort of neutral reading of inflation, and the whole world would be better off, ironically, if we had an inflation interest rate that was 100 basis point higher, simply because the allocation of capital will go back to a price discovery, where today everything is dictated by what the government thinks and as you say, the language and the narrative of the central banks. So, shortening answer a bit, God forbid that the Federal Reserve is wrong, because the cost to capital will be so high that it probably will debubble, if that's even a worse word, but it will puncture the bubble that we have in the green transformation. But maybe that is what we need, to be the stepping stone to create the next wave. And the next wave is coming because, as I said, governments is only 10% into 100% commitment. The infrastructure bills that we see being negotiated in the US is so insufficient that is almost laughable in the size they have for that, because We have underinvested in people, we have underinvested in infrastructure, and we have overinvested in return of capital. So go back to your, if I was a socialist, I would say that we need a new measurement of GDP, but I'm a libertarian economist, so I say what we need is really a price discovery where we have both the government money and invisible hand working together with the private sector more aggressively. And the private sector needs to lead the agenda on finding new technologies that are feasible, financeable, and actionable.
One question before we open it up to the audience. A lot of challenges ahead. What I'm interested in is, can we do it? Can we successfully tackle climate change?
We can absolutely do it, but we need to pull the wool in front of our eyes away, thinking that moving back in the evolutionary chain to renewable energy is the solution. It's very much part of the solution because we have plenty of wind, we have plenty of solar, but the density of the energy, and although the universal cost of wind and solar is down by 60-70%, it still fundamentally needs all of the metals that we talked about. It still needs a procedure that is different. It needs still to be shipped, and you still need the grid system, the utility system of all this to be improved. So massive amount of investment. Renewable is very much part of the agenda, but the very big step up will have to come from new technology. We need to force companies, governments, and everybody looking into this new endeavor. But we will do it, Jana. I'm absolutely certain, because I think, to me, the biggest, most optimistic moment we've had in economic history in many, many years is the fact that inside 12 months, we had a vaccine available to people in the world. I would have, being a somber, negative economist, I would have bet you at least 2 years, and instead we had it in 9 months. So this proved me wrong, and I hope to be proven right in my optimism on the ability to do this.
Let me come back to the beginning of the conversation. We're seeing all parts of the world engaging. We're seeing all governments making efforts and moving in the right direction. Who will be the winner in this, if there even is a winner? And I'm aware the winner might be all of us, but which is the most successful strategy in the world right now?
The most successful company in the world will be the ones that are able to adapt to both the reduction in their own footprint and also catering to the customer demand that there is for their products. We've seen that again primarily in the Western world, but becoming controlled about that is very important. But I think the real winner ultimately is the generational challenge that we have. The interesting thing about green transformation is it's one of the few subjects I know of which can bind together generations and political agendas. Today you will find both the far left and the far right being engaged in positive thinking about the green transformation, and certainly around dinner tables all over the world, you can have a 5-year-old, a 20-year-old, and a 40-year-old, and grandpa at 70 agreeing on the same agenda. And I think that is what is forceful about this green agenda. That's why it appeals. So the winner is really the next generation in nature. The companies that adapt to this new changing environment will win. I think taxing is going to be part of the equation and the solution, but companies needs to increase the material use and the things. So I think everyone, I know it sounds very holistic. I think everyone is a winner here, except in the short term, we're all going to pay higher taxes, see higher government intervention, and probably have to fail before we get to the next reset. The next reset then, I think, will be the productive one.
Reminder to the audience, if you want to ask a question, please do in the Q&A section of your, or in the chat on your screen. Steen, you mentioned it, we need another crisis of sorts, right? Is that what you're saying?
That's what I'm saying. I'm saying that it's been very much about making the green transformation a political narrative and making it investable. That has just been the two big drivers. The problem with both of them are they are not very actionable. That you raise a lot of money in an ETF or a company changes its its aspiration to be less reducing its CO2 footprint is all well and fine, but actually enacting and doing it is a very different story. I think what we're seeing right now, because of the cost of capital, partly because we've created a bubble without no real tangible efforts, is that we will have to, go have a slight disappointment in the short term before we set it up again. But again, Jana, we haven't started the real journey towards green transformation. In the money spent over the last 24 months, 80% has been spent on catering to the lower K of the economy, the people that needed job support and support overall, and less than 10% has been used in green transformation, and less than 10% again on infrastructure. So the real, we can have the same conversation in 1 or 2 years. It's still going to be an ongoing story. How we end up in terms of taxes, incentive structure, and opening up the world again to a global endeavor to reach the next technology level will be what dictates the return on both capital, but also return in terms of how we can reduce the pressure on nature.
Is there something China can learn from Europe, Europe can learn from the US can learn from China?
Yeah, talk to each other, and they don't.
Sounds like that crisis might be coming, and it also sounds like it's a crisis that we cannot afford. We cannot afford to have, right?
We cannot afford a higher cost of capital. We know that the world is barely creating growth at a zero interest rate policy. Construction, slightly higher interest rate could probably create an environment where we need to prioritize what we want to do. So we have, to some extent, tried to cater for the social injustice and inequality now. Green transformation needs to be affordable and durable, and infrastructure needs to come with it. So there's a huge prioritization game going on for the political and the companies, and I think that is very conducive to a better way forward. But right now, it's unfortunately from my seat very much about hopes and dreams and a political narrative without too much real tangible support.
I'm just getting a question from the audience after all, so I'm just going to pass it along. It reads, how will you see carbon credits and the ESG sector play out in the future?
Carbon credit is extremely important as a tool. It's not a solution because taxing has never really, gained anything. It creates a revenue and it creates a more level playing field. But I have no doubt that the single biggest subject in investment is going to be carbonization, whether the company is in it or not, whether we have technologies to help it, to capture it, to do it. Very, very important. ESG is super relevant, but super difficult to do, because if you buy an ESG ETFs, you get a lot of names that shouldn't be in there. So the ESG also needs to be defined. And maybe that is the closing comment here. We are doing the right thing. We are trying to do the right thing, but the definition that we use, electric vehicles, when is it efficient or not, what is needed in terms of infrastructure investment. Let's get the numbers on the table and then prioritize how we go from there. But ESG is too undefined, and a lot of things will be done in the name of ESG and on green bonds. You only need to look at the last EU budget, which now has 5% of the GDP ability to raise funds in Europe. It's 5% this year. In 5 years' time, you want to bet me it's below 20 or not. So a lot of things will be done in the name of credit, carbon credit, and ESG. But it is part of the solution, absolutely. And ESG is net flow wise the biggest inflow we see right now.
One final question, and I need a short answer on that. What key trigger points do you need to see in order to say for sure that inflation will not be transitory?
So my take is, I'm already convinced, but I think the market will see it in August. In August, you are past the centenary celebration in China, the 100th anniversary of the Communist Party. You have the liquidity provision that Fed is doing for treasuries is going away, and the reverse repo is disappearing. You have the Jackson Hole where you have a tapering. So for me, reality sets in somewhere between August and September.
Got it. And I'm afraid we're out of time. It's been a pleasure chatting with you. The only thing left to say, Steen, is to thank you for your insight. Thank you to the audience for listening, and make sure to stay on and watch the other amazing panels later on during the day. Thank you very much.